Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. Thanks for being with us. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Watson taking care of those charts today. Here to take us through the trades, Alan Nuckman, bullseyeoption.com. Good morning to you both. We just had on a bear who was worried about what happens next. In fact, he was shorting a lot of things. Stephen Orr is his name. 43.27 was his target. Alan, how are you feeling about the market? I know you do the technicals and everything, but do you get any vibes here?
Well, I trade what I see, and he talked about history. Let's look at the history of the S&P chart over the last, since 1950. It'd be pretty much straight up with 2 pullbacks in that period of time. So picking the top and the turn of the market's a very dangerous vocation that I don't recommend. If you look at it, we hit 4,600. That was the breakout target of that range that we were in the S&P from 3,800 to 4,200 for 6 months. So now we're seeing a little bit of a price pause, but I don't think anything's changed. And I've had some people say this is a Wile E. Coyote market and it's going to fall just because of gravity. That's not a trading strategy, in my opinion.
I see. All right. So let's talk about CVS shares. It has been, a little volatile lately, had earnings recently. What are you thinking?
Well, I've got a theme for today. The 3 stocks I picked all have the same kind of thesis here. So what we've seen is a bottom base made in May. We're trading here between 65 and 75 now for 4 months. And when we saw that low, we did not see new highs and implied volatility. That's a sign of a sentiment shift. So what I'm looking for here is the break out of this range. We're sitting at about 75 right now, and then the target on this is 85. What I'm looking at is a November 70 call. It's trading for about 7. The PE on this stock is 8, so it's a very inexpensive stock in relative terms. So the November option has 3 months of time. It's $5 in the money, and if we get to that 85, that option gains 100%.
I see. Okay, so what do you think of that strategy as he's taking a look here? Ben, look at the chart for us.
Yeah, you bet. And I think Alan is absolutely right here in terms of this kind of reversal. I mean, these are changes where the prices have made those basing patterns, and they're now starting to move up on the right-hand side of the chart. In this case with CVS, we've got the 50-period moving average rising, the 200, which had been falling, starting to flatten out a little bit here, and it's building kind of this stair-step move to the upside. Range bound in between that 73 and 76.5 right now. It's on its way potentially to challenge that 76.5 resistance, and if it can break out, the next near term above that is at about 78. If you go back out to those highs coming on the downside, prior to this reversal, you hit that 85 mark. The only challenge perhaps here, even though MACD, which is a momentum indicator based on moving averages, is showing a bullish divergence, meaning its highs are getting higher as price was kind of flattening out here a little bit, that MACD momentum has backed off just a little bit in the last little while as this stock has traced sideways. If that comes back up above the 0 line and we get a new higher high, that suggests really exactly what Alan's been talking about, that the bulls are starting to nibble at this after this last earnings announcement, pushing this higher, not making new lower lows yet, and potential to break out through that resistance. But it's got to break that resistance 76.5 to get to that next kind of stair-step level above that. Nicole?
So there was a but in there, but seeing the bullish divergence, and that helps you, Alan. Your thoughts?
Yeah, so he's seeing bullish divergence in the MACD indicator. What I use is implied volatility. That's the emotion of the stock, and that reversed in. So that's a sentiment shift, and we've seen it time and time and time again. That's when a stock that was bad enough is bad enough to buy because the short sellers are done selling and they've run out of strength. So I like the but. I'll take it. And again, I'll take out of that. He's saying maybe not today, but if a breakout above that 76.5, that would be a very positive sign and get the stock on the start up to that 85 level is what I'm looking for.
All right. Next up, Helmerich and Payne. A recent price target raise from Goldman Sachs, but still a sell rating. And you're watching for a bullish divergence here as well. Tell me more, Alan.
Right. It's got bullish divergence on the fact that it made lows in May, but not new highs in implied volatility. Also, as with all of our stocks today, what I'm seeing is some leverage buying, some option accumulation, some money flow into these stocks, which is very positive. So this stock is also a cheap stock. PE of 11 is trading around 43.50 right now. I'm looking at the January option because the volatility is relatively low. You can buy more time. The January 37.5 call is trading for about $7.50. It's $6 in the money, has 5 months of time. And again, it's as much the strategy. We've always talked, I've been talking for weeks and months, that oil was the next asset class to make a recovery, and we're seeing that come into play as the energy stocks are starting to get a jolt.
I see. Okay, what do you think here when you look at this chart, Ben?
Yeah, really, again, Alan and I are kind of on the same wavelength here when it comes to this reversal that the stock has made. I mean, it has been overall kind of a sideways churn, but this intermediate to long uptrend definitely making some headway towards the right-hand side here, back up towards some of those previous highs. Now, that being said, it is trying to bounce potentially off of this support that it's been churning between right around that 42.70 mark. It's got a resistance overhead about 45.5. It's tested that a number of times. Long shadows on that candle, so a little bit of selling pressure at that 45.5 resistance. If it can break through that on a bounce off of this support level, then you would perhaps flip that range up, and that puts you up into that $50 range, perhaps as a symmetrical kind of measured move into that next area. 50-period simple moving average starting to rise, definitely. 200 staying flat. The MACD over you, if you could look at the course of this reversal, it's been gaining strength. It really hasn't dropped into the negative until this last really week or so. And that would suggest that maybe not a lot of sentiment yet to the upside in this sideways range if it can gain some strength breaking out of that resistance. But, you know, Alan's looking at a little bit longer term play here than just this sideways swing move. That being said, the key to this is once again the breakout of that 45.5 resistance.
And the key could be that this trade goes into January, as you were saying.
Yeah.
Alan, final thoughts on this one?
Right, exactly. I'm buying enough time. I have the right to be long from 37.5, which is, you know, down there at that low level. Plenty of time. A deep in the money option. The expiration break even's only $1 away or so. So it's got the probability and math set up. And as I say with all these commodities and resource plays, they always have price pop potential. And if there's just a modest move in the underlying stock, this makes a nice big move in the option. That's the strategy.
All right. Next up is International Paper, which actually has been moving higher since its latest earnings report, even though it was somewhat mixed. So that's how it's described. What are you thinking about this one, Alan?
Well, first off, paper's half off. This was a $60 stock in 2021. The PE, again, 11. So what we're trading at right now is about 36. It's been between 30 and 40 now for almost a year. Let's just say 10 or 11 months. So we're above the 35 midpoint of that range. Typically, you'll see a pop to the top of that range, and then a breakout would target 50. Again, with the low implied volatility, that bullish divergence, that new low in May, but with the low implied volatility, you can buy more time. A January 30 call, which is at the low, trade for about $6.50. That option's $6 in the money. So the expiration break even is 50 cents, and probability, chart-wise, bullish divergence, leverage buying add up to me that you know, we should see a more than a 50-cent move just to break even, a 50-cent move between now and January, which is 5 months of time.
Look, and people love those low PEs. When you're talking about PEs that are at 10 or 11 versus so many of the high flyers that have run up lately.
Right.
Ben Watson, your thoughts on the chart?
Yeah, again, this is very similar to what we've been looking at on the other two, with a rise on the right-hand side. Now, the one challenge with IP here is you get this little bit of a topping pattern above that 35.5 support. Bit of a bearish candle today. Nevertheless, you've got good solid momentum that has not been dropping down below the zero line as this is testing that support. You've got the 50 and the 200 period simple moving averages rising. Both cases that would suggest some bullishness. 50 is moving faster than the 200 as it typically does. We could be in that position for a crossover. And I like Alan's methodology here of buying an in-the-money option and buying more time than you expect to need, that would put the probabilities in your favor. It doesn't guarantee the success of a trade, but playing that longer-term reversal that we've seen in this stock, it's got a resistance level up there around that $40 mark to contend with, though.
All right, and Alan, final thoughts here.
Well, I'm just happy that Ben's now gotten a little bit more optimistic. Now, it might not be the usual Ben, but at least I'm making progress on this show.
There you go.
For the moment. Well, you know, we'll have to wait and see, and that's why everybody has to always tune in. Good to see you both. Thank you, Alan Nuckman and Ben Watson. Thank you both for being here on the Big Three. Thank you. Coming up next, we're going to spotlight Trinity Capital. The company just announced $75 million public stock offering. The president CIO